How's it going, guys? Today we are going to talk about, does cheap commercial truck insurance exist? In a nutshell, cheap is normally a term used for little value. So I try not to get too much into cheap as a professional advisor. But less expensive insurance, maybe that's a better way to look at it. So in essence, to get less expensive, you have to break down to how can we get the cost down. And so there's a few different ways you can do that. Of course, shop the market. I always am a big proponent of shopping the market. That's a good way to get less expensive insurance. So I advise you to go find an independent agent, one with the Trusted Choice logo, part of the Independent Agents of America, and they'll go out there and shop the market for you, as opposed to you going to what's considered a captive agency where they only have one market available for you. Once you found that independent agent who will shop the market, there's some additional things you can do. You can adjust coverage. So for instance, more coverage equals more protection, but it's not always necessarily in your budget. Luckily though, you can adjust your coverages to help save you on your truck insurance cost. For example, physical damage is usually necessary for trucks with an outstanding loan or lease. But to reduce your total cost, you could simply raise your deductibles, say from $500 to $1,000, or $1,000 to $2,500. Just remember, you'll have to pay more out of pocket if you file a claim. Also remember, less coverage means less protection. Make sure you're satisfied with the coverage you choose before you start your policy. Another thing you could do is factor monthly payments. So you could look at that annual cost, and it could be $11,000, $15,000, $23,000, $50,000, $80,000, whatever it may be based on how many trucks you have in your operation. But don't let that annual price shock you. Instead, break it down into monthly payments. It's a lot easier to digest and say, yes, I can afford X amount monthly, $942 a month, $2,300 a month, whatever it may be. Some companies, though, like say Progressive, can offer significant discounts to customers who pay in full. I think they offer, I want to say 10% off. So if you've got a $20,000 bill, $2,000 off is a huge chunk. Now, you might then have to go to your bank and get a line of credit, or maybe even a factoring company. Though those can have high charges, but it might be the best option for you to save the big discount an insurance company may give you if you pay in full. Something to consider to help get that price less expensive. Ask about other discounts though besides the pay in full. So for instance, CDLs, the longer you have them, sometimes you get more of a discount. Your business experience can give you a discount. If you have had insurance in the past, you get a discount. Sometimes if you have another business policy, like a general liability or a business owner's policy, that'll give you a discount. Nowadays, there's also a newer discount relative to the trucking insurance world, which is if you allow them to monitor or track your miles and logs, a lot like these electronic logs. You can plug a little device into your truck, and the insurance company will track some of your statistics, and some of them will give you 5, 10, 15, 20% or more discount for that. Not everybody wants that big brother approach, but if you're looking for less expensive insurance, it's a good thing to consider. Once again, this is RC Rue with the Rue Company, trying to help educate you about insurance. Thanks.